And now to some news that might interest shareholders of one bank, Equity. Well, Equity Bank, Kenya's second largest bank, has posted a net profit of 17.3 billion shillings in its 2015 full-year results, representing 1% marginal rise in after-tax profits from 17.2 billion shillings reported in the previous year. Well, despite the dismal performance, the bank has actually attributed this to high interest rates and ballooning operating expenses. The group CEO, Dr. James Mwangi, is not shaken and hopes for better results this year. By all standards, it seems like it was a turbulent year for Kenya's biggest bank by customer numbers. Equity Bank saw its profitability remaining rather flat in its latest trading results. Compared to its peers such as KCB, which reported a net profit of 19.6 billion shillings, a 16% growth, Equity's results were telling of the volatile macroeconomic environment the bank faced. According to the man at the helm of the bank, James Mwangi, a major offensive is brewing as the bank continues to realign its business strategy to remain competitive.
We registered 24% growth in the balance sheet of the bank, touching almost half a trillion shillings balance sheet now. This was mainly driven by a 23% growth in customer deposit.
Surprisingly, despite posting a slight jump in profits, the bank had headroom to issue shareholders a decent dividend payout. Apart from posting a small jump in after-tax profits on a rather positive footing, the bank's net interest income grew to 43.5 billion from 35.4 billion shillings, a clear indication that the bank's liquidity was in check.
Here we saw 1.9 million customers obtaining loans from their funds, and that again enabled us to quickly translate those 23% growth in deposit into loans, which grew by 26%. So
the bank's loan book stood out as well, with loans soaring to 269.9 billion from 214.2 billion shillings, while the ratio of non-performing loans to total loans fell to 3.3% from 4.2% in 2014.
The bank has started delivering a lot of convenience. Last year we saw 1.9 million customers obtaining loans from their funds, and that again enabled us to quickly translate those 23% growth in deposit into loans, which grew by 26%. So that
the bank, which has subsidiaries in Uganda, Tanzania, DRC and South Sudan, says it will be aggressively upping its game in these markets moving forward. On average, the subsidiaries contribute about 6%, approximately 8 billion shillings to the bank's bottom line.
All along, we banked all the embassies in South Sudan, and that helps us to sustain the operations. But this week, we were shortlisted and won the tender bid to bank the UN humanitarian agencies, 41 of them. So what we see, while the commercial sector may not be performing, all that humanitarian economy, we hope we will be able to bank it.
The bank's South Sudan operations were massively dented owing to forex losses, leaving the lender at a loss of nearly 5 billion shillings, which came from South Sudan, whose currency was devalued by more than 90%. Abi Agina, KTN Business.